What taxpayers need to know to claim the Earned Income Tax Credit. IRS Tax Tip 2021-06, January 25th, 2021. The Earned Income Tax Credit, there's a link to that here, can give qualifying workers with low to moderate income a substantial financial boost. In 2019, the average amount of this credit was $2,476, to not only reduces the amount of tax someone owes, but may give them a refund even if they don't owe any taxes or aren't required to file a return. People must meet certain requirements and file a federal tax return in order to receive this credit. The Earned Income Tax Credit has a refundable portion to it, and that means that you still could get a refund even if your tax liability is zero, which at that point it wouldn't really be a refund. It's kind of like a benefit program at that point in time. So the same thing is true with the child tax credit. Those are the two major types of credits that have that refundable kind of portion to it, meaning you still might get money. You might get, quote, a refund, end quote, even though your tax liability has gone below the 0 point. Many people don't actually get the Earned Income Tax Credit even though they may qualify for the Earned Income Tax Credit, because even though they have some taxable income, their income may be below the threshold to need to file. So there could be a situation where you don't need to file, you're not required to file because you're under the threshold to owe any tax liability. However, if you were to file, then you may have access to some of these refundable credits, including the Earned Income Tax Credit and possibly the Child Tax Credit, and still get money back even though you were not required to file, because you'd get money back past the point in time of that 0 point of liability. So in other words, if you don't think you're required to file because your income is below the threshold and you're thinking it's not worth your time to file because possibly you have some earned income, but it's pretty low and the withholdings on it are pretty low. So for example, if you just had a little bit of work and you know that they only withheld like $25 or something like that, it may not be worth your time to file to get the refund of the $25 that withheld from your paycheck. However, that withholding is not the only thing that you may get a benefit from. You may also get a benefit from the refundable tax credits if you qualify for the refundable tax credits. So therefore, rather than just getting the amount that you paid in back, a refund, such as the withholdings on the W-2 income, you may also get part of the refundable tax credit, which could be including the Earned Income Tax Credit. And if you're qualified for a child tax credit, that also has possibly a refundable component to it. So it might be worth filing. There are free file options to take a look at and test it out. And you can go to the irs.gov website and look for the free file options and just test it out. If your tax return is really basic at this point in time, and if you have access to free file software to test it out, then, test it out. I would check it out. So we have the EITC eligibility, that's the Earned Income Tax Credit. A taxpayer's eligibility for the credit may change from year to year, so it's a good idea for people to use the EITC Assistant to find out if they qualify. So you can go to this link right here, the EITC Earned Income Tax Credit Assistant. It is kind of more of a complex type of tax credit because it actually, economists like it because it's supposed to try to incentivize people to work, meaning most of the time when you have a benefit type of program, the more work you do, the more earned income you get, the more self-sufficient you are, which is kind of the goal. What we want people to be is self-sufficient, the less of the benefit they get, because then the idea, of course, is you don't need the benefit anymore because now you've become self-sufficient. But that's obviously a disincentive to start working more, because then you lose the support that you need on the benefit program. So the Earned Income Tax Credit is kind of funny that way because it actually goes up as your earned income goes up. So you can think of it as kind of like a bell curve or kind of curve. The amount of money you get back from the Earned Income Tax Credit actually goes up as you have earned income, with an attempt to try to incentivize people to earn income, or not at least disincentivize people to earn income. And then at some point it caps off, and then it'll go back down as your income continues to increase. So that's good because hopefully that does help people to not have a disincentive to work, but also it makes it a little bit more complex as well. So there's a couple things you want to look at. One, do you qualify? And if you qualify, then it's still a little bit complex to know what the actual amount you will get, because there's a lot of components into it. And to help you out with that, of course, software is a great tool. So you can use this tool to see if you qualify. And then possibly if you have a fairly basic return, you might be able to get access to free software which hopefully can help you out with things like the earned income tax credit. If you use the free file fillable forms that you could search through on the IRS website, I'm sorry, the free file options, not the fillable forms, but free file options, where the IRS is basically looking at third parties that may have free file options for people's income that are below a certain threshold. If you look into those items, some of them do not offer the earned income tax credit. So just make sure that if you're looking at those free options, make sure you're choosing one that allows and has access to the earned income tax credit. We'll do that within the free option if you're looking into that. So eligibility can be affected by major life changes such as a new job or loss of a job, unemployment benefits, a change in income, a change in marital status, the birth or death of a child, a change in a spouse's employment situation. Taxpayers can qualify based on their income and the filing status they use on their tax return. The credit can be more if they have one or more children who live with them for more than half the year and meet other requirements. So you're not required to have a dependent or a qualifying child or anything to get the earned income tax credit, but again, it's kind of a complex credit. It'll typically go up if you have the qualifying child on there as well. So new this tax season, there's a new rule to help people impacted by a job loss or change in income in 2020. Taxpayers can use the 2019 earned income to figure their earned income tax credit if their 2019 earned income was more than the 2020 earned income. The same is true for the additional child tax credit. For details, see the instructions for Form 1040. Now, this is another complication with the credit, but could be a good benefit to allow more people to get the credit, which again, it always kind of works out kind of funny that way, right? They're trying to get the benefit to more people, but it makes the thing more complex. But in any case, if you didn't have income in 2020, you're filing the 2020 tax return, and your income was lower in 2020, which is going to be the case for many people, then that could actually reduce the earned income tax credit, because as we said, the earned income tax credit actually goes up as your earned income goes up, because it's trying to be an incentive to work up until a certain point. So they're basically saying if your 2020 earned income was lower due to the problems in 2020, then you may be able to use the 2019 earned income numbers, which you would normally think for taxes, like why would I want to use 2019 numbers if my income was higher? Because normally for taxes, you want your income to be low so that you pay less taxes. But in the case of this kind of refundable credit, you want your income to be higher to some degree, because the credit could be higher and you're not paying any taxes if you're under a certain threshold in any case. So what you want to do then is check if you got to kind of compare. You file it for 2020 and then compare it to your 2019 numbers if your 2019 earned income was higher than 2020. And then if you get more of a tax credit in that case, then you could have a benefit of using the 2019 earnings even if they were higher because of the credit. So you have that option. Again, software is useful to make those kind of determinations. You might have access to free software if you go to the IRS website starting there and check out their free filing options. So then we have the 2020 maximum credit amounts allowed. The maximum credit amounts are based on whether the taxpayer can claim a child for the credit and the number of children claimed. So 0 children, the max amount is 538. So note again, you don't need children in order to get the earned income tax credit, but if you have 0 children, the max is, as you can see, a lot lower. It's 538. If you have 1 child, the max that you could possibly get is 3,584. If you have 2 children, the max is 5,920. 3 children, max 6,660. 2020 income limits. Those who are working and earn less than these amounts may qualify for the earned income tax credit. Married filing jointly. So if you're married filing jointly, 0 children, and your earnings are less than $21,710, then you may qualify for the earned income tax credit. 1 child, then it goes up to the $47,646, and this is for married filing joint. And 2 children, $53,330, and then 3 children, we've got 3 or more children, so it caps off benefiting after 3 children. So $53,844. So that's for the married filing joint. If you're talking head of household and single, then 0 children, you're talking the income threshold to possibly still benefit for the earned income tax credit, $15,820. 1 child, $41,746. Is 2 children, $47,440. 3 children, $50,954. Taxpayers who are married filing separately cannot claim the Earned Income Tax Credit.